Oh, hello, it's Susie again from Esoteric Trading Solutions. I'd just like to go through common trading mistakes that new clients make, traders or investors. If you're a beginner, it's really important to learn and to research and really not to trade very much at all. So I guess the thing is, learning can potentially save you a lot of money and frustration, but also can certainly enable you to reduce the risk of losing, and also enables you to increase your success in trading or investing, which does require a lot of discipline. The crypto market is like no other market out there, not like the FX market or the equity market or the money market or the fixed interest market. It's not easy. It's not easy to trade because it's a very technology-based market. Also, there's a lot of scams in the market, and it's completely unregulated at this stage. Also, white papers that come out for ICOs aren't audited, and so therefore there are quite a few scams in the market, and you really need to do your research. Trading isn't easy. Essentially, it takes time and education and research, and particularly in the crypto market, you've got to do a lot of research. So really the emphasis on researching and learning and not trading, pretty much. Also, what I do find with new traders, they often go against the market trend, and this is a big one. If the market is going down, trade with the market, trade with stop losses at all times. Essentially, if the market goes down, keep trading with a stop loss and bringing that stop loss down to break even to where you actually executed the trade. And also, when the trade does go into the money, bring that stop loss down again so that you have a trade with that's basically risk-free. So, for example, if Ethereum was at 345 and you place a stop at 365 and the market moves your way, keep bringing that stop down. So that essentially you're at break even, and if it does go past your 345 sell level, say if it got down to 300, you bring down that stop to 325. So effectively, you've got a risk-free trade and you've locked in $20 no matter what the market does, and you continue that market down. Also, if the market does spike back up, at least you've locked in $20 of profit. Really important to do that. And also, you don't trade against the trend until the market has formed a base. Fairly important. Often when you in markets, you do see M shapes and W shapes, and particularly when a market's coming down, when it starts to base, you'll often see a W shape, which means it's starting to base out. Alternatively, if the market is going up, and you start to see an M shape or something that looks like half of an M, then you effectively get ready to sell that market with the M going up and down as such. Another thing, in the ICO market or in the initial coin offering market, the crypto market, there are a lot of new cryptos coming out, and most of them are incredibly ridiculous. Essentially, as I've said before, they're startup risk. They have the same technology as another coin, and it might be just literally a cut and paste job. They may not have any white paper, or the white paper that they bring out with the crypto is so badly written, or it's just been put together, cut and paste, and there's no credibility to it or anything else. So you've got to be really, really careful. And as I said before, research and learning are just the foundations of this market, and less on the trading side, but literally reading and research. There are a couple of words in the crypto market that you might come across that you're not familiar with. FUD, F-U-D, fear, uncertainty, and doubt, and FOM, fear of missing out. We see that a lot in this market. Young traders or new traders want to get in, and they want to get in quickly. They're worried that they're going to miss out on a trade. When you do read a lot of crypto talk, you'll hear a lot of FUD, where people are actually trying to push their own crypto, and they're trying to create scare tactics to force investors or traders to get out of other crypto by creating fear, uncertainty, and doubt about the crypto itself. So again, you do need to be fairly careful about what you read and what's true and what isn't true. As I said before, there are countless cryptos in this market, initial coin offerings, and again, mainly they're cut and paste and just absolute garbology. We've seen that quite a few times when Electronum There's one crypto that's not even listed, which is called OneCoin, which I absolutely believe is a scam. Again, Electronum seems to be a scam as well, where they're saying you can mine with your mobile phone, which is absolute crap. But, the list just goes on and on and on. I mean, effectively, they can say anything in these white papers. If they have one, and as I said, they're not audited by anyone, and they can basically say anything. We've also said in Tezos, where it was one of the largest crypto initial coin offerings, and Tezos now, was a startup risk. Now the owners and the developers have gone into legal dispute, and it looks like that project may not even get off the ground. So again, people that invested in Tezos, investor or traders, it looks like they may have lost their money. So you've just got to be so careful. I guess the thing is, in any market, when you do start losing money, the best thing to do is cut that quickly. So that becomes a small loss and not a big one. Often with new traders, they keep holding on to something thinking the market's going to turn around, and often it doesn't. So honestly, you're better off cutting a trade quickly with a small loss, so you can actually reassess, do the research with a clear mind and reassess the direction of the market. I mainly put out buys and sells on the main cryptos. I don't do it on any of the small ones at this stage because, again, we don't know a lot of the development process or the actual details of the crypto, and I'm very reluctant unless I've done an absolute thorough research on something to buy something particularly. I'd rather sell it, but again, there's no point selling it either if you don't have the information at hand. So research really is the absolute key. And actually, you're better off staying out. So FOMU, fear of missing out, you're better off not even getting involved. Also, again, the trade should make sense. There's no point doing a trade if the profit factor to the risk is not 3 to 1. So in other words, you're risking $20 to get 60. If you're risking anything less than that, you shouldn't be doing the trade, that's for sure. So, for example, if we put a trade on and we're risking stop loss of $20, we're wrong, but we can gain 60, then that's a 3 to 1 ratio, 60 divided by 20. So the thing is not to be rushed, it's basically to be patient. Patient is the key, and know your stuff, educate yourself, research, learn, and that's really the key in this market. It's very different to other markets that I've traded, that's for sure. We do that at Esoteric. We basically do a lot of research, collect a lot of information, and then we analyse the ICOs before we even go into them and really look at all different angles of that. Of course, when you do start trading and you're new, you should trade very, very small, less than 1% of your capital. The whole key is to learn first and to do research. The market will still be there, so you're not missing out on anything. So trade very small. Again, if you're worried about a trade, if you're in there too big, or you're not prepared, or you don't like it, or something doesn't feel right, get out of the trade straight away. Close it down and just get out. Another thing is it's always imperative to have a plan. The market can essentially do anything. So have a plan to where you believe the trade is going to go. Essentially, where you're going to have your stop losses in, where you're going to get out, and stick to that plan. Don't waver from that plan. Also have an idea of where the cryptocurrency is actually traded, what trading range it's actually traded in. So, for example, Ethereum just recently, Ethereum USD has basically been trading in the range of 280 to 310. So, ideally, you'd be selling at 310 with a stop loss at 315 or 317. And essentially, buying at around 280 with a stop loss at 272 for a move back up again. If it broke one side or the other, if it broke 280, you get on the sell side again. If it broke the 310, 315, you'd be on the buy side again. The focus really is important for support and resistance levels in the overall direction of the market. So often these levels on the support side at 280 hold, and on the resistance side they hold at 310 unless the currency itself, or the cryptocurrency, Ethereum particularly, trades out of those ranges. Then it's a new direction in the market for that cryptocurrency. What's really, really important, and this is something that newcomers and new clients or new traders do particularly, is they lose their private keys. Now, private keys, a lot of money's being lost on the loss of private keys, which are essentially your ownership to that asset. If you lose those private keys, you're dead in the water, because you've actually lost the ownership of your asset. So it's really important to have private keys stored away somewhere in a hard copy in a safe place, but also to use, as I said before, a Ledger Nano S, which will actually store those private keys for you as well. Don't leave them on a computer, don't leave them even on a mobile or anything else. Have a hard copy, but also store them on a Ledger Nano S. Also, when you're in an exchange, it's important to have a two-factor authentication code, and also a restoration code offline. Again, security is absolutely essential in this market, because people can hack into exchanges, and they can hack into portfolios and steal your cryptocurrency. Again, learning is the foundations of this market. Reduces stress, and obviously learning and research improves the probability of success. As I said before, I trade the major well-known cryptos like Bitcoin, obviously Ethereum, Litecoin, and Ripple. At the moment, I won't trade the small ones unless I know a lot about them, and I've done a lot of research. So, really important. Another thing that new traders tend to do is they tend to buy or sell the wrong crypto. They tend to buy and sell too much, or they tend to put in the wrong code. So some codes are fairly similar. You might have Monero and Ripple. Their codes are very similar. You might want to buy Ripple, but you actually bought Monero. So again, slow down. There's no hurry. There's no fear of missing out, FOMO. Just relax and take it slowly. The market will still be there. Another thing is, it's really important to use the right exchange. As I mentioned before, there's 153 exchanges, and some are very small and fairly shady. It's very difficult to get withdrawals from those exchanges. Often they get ignored. And so again, we as a group only stick with Bitfinex, which is the biggest exchange in America. And again, it's really important to stick with the biggest exchange, because some of these other exchanges, 153, it's just crazy. They will fall over. And also there's more than nearly 1,200 cryptos, coins and tokens. So, within 3 or 4 or 5 years' time, 90% of those are just not going to be around. 90% of businesses, startup businesses, don't survive, and certainly 90% of crypto coins and tokens won't survive, just like the exchanges won't. So we stick to the biggest exchange in the US. There are shadow markets in Australia, but they are shadow markets. They're not proper exchanges like in the US. And that's why I don't trade the shadow markets here, because they can effectively make their own price, do their own conversion, and still charge you 5%, but also they can charge you on their own price and their own Aussie US conversion. So that's another reason why I don't trade the Australian exchanges. There are a lot of scams in the crypto market. Many scams, and you do see it all the time where something looks very similar to another crypto. It's literally a cut and paste job. As I mentioned, the white papers, they don't have white papers on them. The technical detail is very bad, or they're marked for the Ethereum technology. But just scam after scam. Also, some companies might mine or pre-mine their own coins. And it's pretty much a closed system where the company literally controls everything and brings out a valuation, which is absolute garbology. And basically, everything is manipulated, and you've got to be really, really cautious. And I think one company that's like that is OneCoin. So I'd certainly stay away from that. They bring out their own valuations. They say they pre-mine their coins. And, you have to use their coin to buy their services, which is education. But it does seem like a big scam to me. Don't let your actions be guided by panic and fear. Have a clear head. Don't overtrade. It costs money in terms of spreads, but also losses. You could invest in the wrong coin, and that coin could literally go to zero very quickly. So again, it's really important just to start with 1 to 3 coins. Understand the range on those coins, the trading range. Understand what those coins are in and out. Again, looking at Bitcoin, Litecoin, Ethereum, and Ripple. And, look at those coins and have a belief there will be longevity in those coins, and also do research and education. Very, very important. Other things that can help your trading, and I found this very important as time's gone on since I've been trading since 1987, journalise your trades and analyse them. So if you use technical analysis like I do, or if you don't, take screenshots of your trades, write notes. What was your reason for the trade? What were your stop losses, your entry point? Where did you expect the trade to go to? And you stuck to your plan. So there's a lot of things to remember when you're a first-time trader or even an investor. I hope this helps. Please do ask me a question if you need to, and I look forward to talking to you. Thank you.